Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on SPY, IWM, and QQQ. The major events this week are Tuesday, tomorrow after hours, Apple earnings. Wednesday, 2 p.m. Eastern, FOMC, expecting the most reaction from those two events in the markets because the tech sector is so significant. And right now we're watching a very clear tightening range. So lower high is now set. 267.89, we closed down at the low of the day with the bears in full control, and we're looking at support of 260.85. If this level breaks, it's not game over for the bulls, but it shifts the odds very significantly to favor the bears on the longer term weekly trend. Likewise, if we get a bull break over 267.89, we're going to be looking up to 271.30, and it's the same thing. It will shift the odds to the bulls. So the bears have momentum in their favor. We're heading back down to our 3 must-hold support levels on the weekly time frame. So even if we break the first one, again, it's not game over. As long as we still hold these other two, the bulls still have some life left in them. It just shifts the odds. IWM on the daily, lower high and lower low, more of a little bear flag, close to being confirmed if we break 152.96. And IWM on the equilibrium pattern has a lot more space to work with. We could pull back all the way to 149 and still be just fine and very healthy with a new higher low on the weekly and still in this long-term weekly equilibrium pattern. So that's why I say that SPY, that the break of the last two ranges aren't definite here because there's so much space in between the next support level or the next resistance level that we could trade within. So just want to make sure everybody's not saying once we get that break, okay, that's the direction for the next 2 months. That will make that direction more likely, but it's not a sure thing. We do need the follow through. So weekly time frame for IWM can easily continue down and still form a higher low. QQQ, heavily weighted in the tech sector, pulling back. If we break 160.18, there's a gap to 159.31, and we are looking at the same kind of pattern, but a potential bearish reversal head and shoulders pattern, and the neckline would break bearish if we break 153.88. So that's the must-hold support level for the bulls. We're heading down towards that level. If it's a bearish reaction to Apple earnings, that's only going to add to the bear momentum in the tech sector, and definitely something to be watching overall. VIX on the daily time frame. Bulls finally showed up today, still struggling. Even when we had the market down today, the VIX bulls were struggling in the red as well for a good part of the day, but the end of the day volatility saw the VIX bulls show up. But support of 1457 still holding. Must hold that level and need a bull break of 1984 to see a bull break. So the weekly time frame here with our high, low, lower high, higher low, and just weakness still right now, just trying to defend support. Again, another one that favors the bears. You would think that if the bears are favored in SPY, that the bulls might be favored in VIX. That's not the case. Both VIX and SPY bears are favored in this pattern where we currently stand, and it's going to take some kind of bullish catalyst to get these tech sector bulls going again, which again, if earnings are done, we have to be thinking, well, what's the next catalyst now? And if we see bear breaks, we will expect VIX to see some upside, but it's certainly not the strong positioning that I would be anticipating with the potential break of this weekly pattern on SPY approaching. So that's where we stand overall. Earnings and FOMC will give us some more clarity. 2 clear levels to be watching on SPY, support and resistance. And once we get those breaks, that will give us a lot more direction and a lot more likelihood in terms of shifting. Right now, if this pattern, I'd call this pattern a 50-50 right now. And like I said, it slightly favors the bears, but the overall trend favors the bulls. So I would kind of weigh those two out with each other. And if we see a bear break of 260.85, I would say it's going to shift to 65.35, that we're going to get a bear break on this longer term pattern. So it will be significant. I appreciate you watching. We'll check back in tomorrow and see how Apple earnings go. See you then.